Hey everyone, welcome back to Finance Friday. This is another special edition of Money Girl where I answer all the questions that you have about money. I love hearing from you and I want to answer your questions. So be sure to reach out if you have something finance related that's on your mind. You can leave me a voicemail by calling 302-364-0308. You can leave your name or remain anonymous. Today's topic is a good one. It comes from Anna. She sent me an email saying, I'm 56 and my husband will be 55 in November. We both have term life insurance for $750,000. However, the policies will expire in 2029 with the option to convert to whole life. We have a 17-year-old daughter and a 21-year-old son, and we want to leave them money when we're gone. Before our term insurance expires, does it make sense to convert to whole life insurance, or should we take out new term policies? Thank you so much for this question, Anna. You are definitely in a common situation where it's time to reevaluate your life insurance needs and determine what's next for you and your family. This podcast will review different types of life insurance and 4 options to consider before your term coverage expires. When we're talking about life insurance, there are 2 basic types. You can kind of divide this whole world into 2 main categories. You've got temporary or term policies and permanent policies. Term life insurance only insures your life for a period of time, and it's what you choose. It could be 10, 20, or 30 years. If you pay the fixed annual premium and you die within the term, your beneficiary or beneficiaries will receive a guaranteed death benefit. For instance, Anna may have purchased a 20-year, $750,000 term policy when she was 40. Therefore, in 2029, 4 years from now, her policy will expire when she's 60. Now, permanent life, this is the other main life insurance category, covers you no matter when you die. And as you can imagine, a permanent policy is more expensive than term insurance. And it's also more complex because in addition to paying a death benefit, it involves an investment that builds cash value. And there are different types of permanent policies, but I'll go through 3 primary types. And these are also known as cash value life insurance because, as I mentioned, they all have some component of building a cash value. So you've got whole life insurance. This is the type that Anna asked about. It provides a death benefit and a guaranteed return on your cash value. This is the most straightforward type of permanent life insurance, but it's also the most expensive because it comes with virtually zero risk. You pay a level premium that's contractually guaranteed never to change. The second type of permanent coverage is universal life insurance. This provides a return on your cash value that's tied to a financial index or something set by the insurance company, but it's not directly invested in the stock market. It typically pays a guaranteed minimum interest rate with some kind of similar downside protection. Your premiums are flexible, allowing you to increase or decrease them. And the third type of coverage is variable life insurance. This provides investment options like mutual funds that you select from a menu. Now, if they perform well, your cash value could rise far above what you could earn from a whole or even a universal policy. But if they underperform, you could lose part of your cash value. So variable life has the largest growth potential, but the most risk, the most market risk with no protection against loss. Like a universal policy, you can actually vary the amount of your premiums paid. And while you might think that it would be better to have coverage for your entire life, a significant benefit of term life insurance, especially when you're young and healthy, is that it's relatively inexpensive. You can get a lot of coverage for a relatively small premium. However, as you age, the same policy might cost much more depending on your health. So, the older and less healthy you are, the higher your term or permanent life insurance premiums will be. Other factors that typically determine the cost of life insurance include your gender, medical history, smoking status, and driving history. So once your term life insurance expires, like what Anna and her husband are kind of looking ahead to, and you stop paying premiums, your beneficiaries are no longer eligible for the policy benefit if you die. Remember, term coverage only lasts for a specific period of time. And Anna and her husband have 4 years before that's going to happen, but I really like that she's thinking ahead. The most important question is whether you'll still need life insurance after your term policy expires. When Anna and her husband bought their life insurance, their kids were young, but by 2029, they'll be about 21 and 25 and hopefully financially independent or very close to it. But Anna expressed that she wants to leave money to her children when she's gone, and life insurance is an excellent way to do that. So let's talk about 4 options when your term life insurance expires. We'll go through 4 things you might want to do. Number 1 is convert to whole life. So this is something that Anna has probably maybe been offered by her insurance company. Most insurers do allow you to change your term policy into permanent whole life insurance. As I mentioned, it provides lifelong coverage and builds a cash value. So that means your loved ones will receive a lump sum death benefit and any accumulated investment value, no matter when you die. The financial security of whole life could be critical if you have, let's say, a special needs child or an aging parent who depends on you and would need financial assistance after your death. Additionally, it could be part of your retirement or your estate planning objectives. So the pro of converting a term policy to whole life is that you typically don't have to undergo a medical exam. Therefore, if Anna or her husband developed any health conditions like high blood pressure or diabetes, since they first got the policy, they wouldn't be turned down for whole life coverage. However, the con of whole life is that it's much more expensive than term because it offers more benefits. The premium on a $750,000 policy could be 10 to 20 times higher than Anna's current term premium. The second option you have is to convert just a portion to whole life. So many insurers allow you to convert just a portion of your term insurance into permanent coverage, and that can help reduce your premiums and keep some amount of lifelong coverage. For instance, Anna could convert $100,000 of the $750,000, giving her a smaller policy to leave a guaranteed gift to her children at a lower cost. The third option is to buy new term life. So this is something Anna mentioned. Just let your term insurance expire and then shop for a brand new policy. The pro is that it will be significantly less expensive than whole life for the same death benefit. The con is that you typically must undergo full medical underwriting. So that means a medical exam, blood test, and a health history questionnaire. Therefore, if Anna or her husband's health isn't good, their rates will be high, or they could even be denied coverage. Also, if Anna and her husband are fortunate, they may outlive the term of the new policies as well. So they could be in this same position, the same situation in their 70s or 80s when their life insurance expires, and at that point will be even more expensive. The fourth option is to do nothing. You could just let the term policies expire without replacing them. Anna and her husband might decide that the coverage did its job and it protected them during the most vulnerable years of their life when their children were young. Opting not to buy life insurance could be wise if by 2029, Anna and her husband have a healthy retirement nest egg and they've repaid any significant debts. Their remaining savings and assets could be the money they leave to their children rather than the proceeds from life insurance. So, how do you decide what to do when term insurance expires? Well, as I've mentioned, when it comes to life insurance, your health is a significant factor. If either Anna or her husband is in poor health, converting all or a portion of a term policy to a permanent policy is definitely a wise option, especially if they're sure that they still need coverage. If your health is good, you've got more choices when a term policy expires, like going out and shopping for a new term policy. That's what my husband and I did after our 20-year term policies expired this year. Your financial situation is also essential in life insurance decisions. For instance, if getting an expensive policy would derail your own retirement plans, not allow you to contribute to your own retirement, it's probably not a good idea. Your priority is to make sure you're financially secure. Also, be clear about your financial goals when buying life insurance. If you only want to cover your final expenses, like burial costs, or you want to leave a $100,000 gift for each of your children, you don't need a $750,000 policy. Anna's next step should be to call the insurance company and ask for quotes. For instance, she can request quotes to convert all of the $750,000 of her term policy, or maybe even just $250,000 or $100,000 or any amount she wishes, over to a whole life policy. I also recommend that Anna get quotes for new term policies, such as a 10 or 15-year term policy, maybe for $250,000 or $100,000 or whatever makes sense for her. Then compare the cost of term and whole life to see what makes sense. You have the flexibility to choose the provider, amount, and term that suits your needs. It's easy to shop online. You can use a site like Policy Genius where you compare multiple quotes, and you can even speak with licensed insurance professionals to ask for their guidance. I'll put a link to that in the notes for the show. However, as I mentioned, obtaining new life insurance typically requires a medical exam. While there are some no-exam life insurance options, they usually cost more than a standard policy. Anna, I hope this helps you and your husband determine what's best for your financial futures and your children's. Without knowing a whole lot about your financial situation, it's hard to get a little bit more specific. But think about whether you truly need life insurance, whether the amount that you want to leave your children is going to be sufficient basically from the retirement nest egg you already have, and whether the higher cost of whole life is really worth it in the long run. So, there's some things here to think about, discuss maybe even with your children, discuss with a licensed insurance professional to try and weigh the options. Certainly, if the cost is a factor for you, then you'll probably want to look at a more affordable term policy. But if cost is not an issue and you're willing to pay more and you really want to leave a higher amount to your kids, no matter when you die, the whole life could be a good option for doing that. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast. We've got a great team working on the show. Steve Rickyberg is our audio engineer. Holly Hutchins is our director of podcast. Morgan Christensen is our advertising operations specialist. Rebecca Sebastian is our marketing and publicity manager. And Nathaniel Hoops is our marketing contractor.